How do you assess the ECB's toolbox at this point?
Yeah, I mean, first of all, in terms of where we are in the cycle, we still think we are near the trough in the European growth cycle, even though, as you said, new risks have emerged that we need to think about. But if we look at some of the forward-looking indicators in Europe, for example, the January surveys and some of the indicators in Germany that tend to lead the cycle by a bit more, those have ticked up. The spot data is still weak. We had very weak industrial production data for December, Q4, GDP numbers were weak, but we do think some of these things look a little better. Now, for the ECB, we therefore think it's most likely that they will stay on hold. So you are facing, as I said, a little bit of an improvement in the growth outlook. Some of the risks around Brexit, around the trade war, we think have receded. They're not gone, but they have receded. And some of the inflation numbers recently have been a little bit firmer. So you're still only a bit above 1%, but we are seeing a little bit of upward momentum there. And so our baseline is that they are on hold and focus on the strategy review this year. But of course, as you said, that if things turn out worse than I just described, we do think they have tools to respond to that if needed.
So, I mean, what do you mean by that? Do you think the ECB cutting more is going to help drive growth or inflation? Do you think the ECB buying more is going to help drive growth or inflation?
Yeah, I mean, first, as I said, we think in the baseline they're on hold and don't need to do these things. Now, if
right, but you think they have the tools, down, so what tools would they use that haven't worked so far?
Well, I think there is evidence that the tools have worked. Of course, they come with side effects, but on net, we do think they've been successful in recent years. I think the first tool that they have is to cut rates somewhat more negative. We think that the effective lower bound is around -1%, giving them a little bit of room to cut further, not an awful lot, but a little bit more. I think that would be the first line of defense. Beyond that, they could still raise the purchase pace, which probably would need to come with an increase in the limits that they have imposed on themselves, but we think that would be feasible. They could then extend the sovereign purchase program. And then, of course, beyond that, if needed, they could go into other assets, buy other assets as other central banks have done. But we think at this point, the hurdle for doing so is still pretty high.